You want to know how to make 10 times your money in the market. Everyone does. But very few ever ask the only question that matters: what kind of person earns it? People think it's about finding the next big stock, the perfect formula, or some secret pattern. That's the illusion Wall Street sells. The truth is far duller and far more powerful. The real secret is a daily habit, one that looks boring, feels slow, and pays off in decades, not days. It's called becoming a learning machine. Warren Buffett was one long before he was a billionaire. When he was 10 years old, he was already reading everything he could get his hands on, not because it was a sign, but because he was obsessed with understanding how the world works. He never stopped. That's the habit that built Berkshire Hathaway. Not leverage, not luck, not market timing. Learning every single day. Now, when I say learning, people nod politely as if it's a motivational slogan. It isn't. It's a discipline, a compulsion even, and it's damn rare. Most people learn just enough to get through school and then they hit cruise control for the rest of their lives. They graduate right into stupidity. They spend the next 40 years polishing whatever little they already know while the world keeps changing around them. Warren didn't do that. He kept reading, kept thinking, kept updating his mind long after most people his age started retiring, both financially and intellectually. That's why his record didn't fade with age. It got better. When I said Warren has improved since he passed the retirement age of man, I meant it. He's a better investor at 70 than he was at 40, not because his eyesight improved, but because his judgment did. And judgment compounds, just like money. That's the part no one understands. Knowledge compounds. Experience compound. Clear thinking compounds. If you get a little smarter every day and you avoid stupidity, you eventually become a monster of rationality. That's the only monster worth being. Most organizations don't allow that. They pass power from one 5-year-old to another, each repeating the same mistakes with new stationery. Nobody compounds wisdom because nobody stays in charge long enough or humble enough to keep learning. At Berkshire, we did something different, almost by accident. We concentrated power in one place, but we paired it with continuous learning. That's the magic formula. Long time horizon plus rational learning equals extreme compounding. People look at our record and think it's luck or genius. It isn't. It's practice over time. Warren and I never stopped refining our thinking. We didn't chase innovation. We chased clarity. Every year we tried to make fewer dumb decisions than the year before. That's all investing really is, a slow elimination of stupidity. You don't have to be brilliant. You just have to keep improving and refuse to stop. Now, that kind of progress doesn't come from reading motivational quotes. It comes from actual study. Reading, analyzing, questioning, connecting dots across disciplines: history, biology, psychology, economics. That's what we mean by mental models. If all you read is finance, you'll be a one-legged man in an ass-kicking contest. You'll confuse stock price with value, activity with insight. The world will look random to you because you'll only have one lens. But if you read broadly, the chaos starts to make sense. That's what daily learning does. It replaces noise with signal. Let me tell you something else most people never think about. The intrinsic value of Berkshire, or of any human being, isn't just the assets you hold. It's how intelligently you allocate the retained earnings. And in your case, those earnings are your mental energy. What you do with it each day determines your compounding rate. You can spend it gossiping, doom scrolling, or chasing the next crypto miracle. Or you can reinvest it into better thinking, better judgment, and better habits. That's what Warren did for 80 years straight. He reinvested his curiosity every single day. And now people call it genius. It's not genius. It's consistency. And consistency looks boring right up until it looks legendary. You can't copy Warren's portfolio, but you can copy his process. He sits quietly. He reads for hours. He thinks independently. and he acts rarely but decisively. That's how you 10x your investing returns. Not by predicting the next stock, but by upgrading the mind that picks it. Because here's the uncomfortable truth. You can't compound money faster than you compound knowledge. Your portfolio is just a reflection of your mind. If the mind is chaotic, the results will be too. If the mind is refined, disciplined, and constantly learning, your returns will catch up. Now, that kind of daily improvement doesn't feel dramatic. You won't see results tomorrow or next quarter. You might not see them for 10 years, but one day you'll look back and realize your thinking is sharper, your patience longer, and your results exponential. And you'll wonder why so few people ever bothered to do the simplest, most powerful thing an investor can do: read, think, learn, every damn day. Most people don't fail in investing because of lack of intelligence. They fail because they stop learning. And when you stop learning, you start dying intellectually, financially, and often literally. Now, that sounds harsh, but look around you. How many investors read anything other than quarterly reports or market gossip? How many can explain why they own what they own beyond it's going up? People spend more time picking vacation photos than understanding a business model. Then they're shocked when the market humbles them. That's not bad luck. That's willful ignorance. I've said it all my life. Avoid stupidity before you chase brilliance. But stupidity is seductive. It flatters your emotions. It feels active. You get to do something. And humans love to do dumb things as long as they're busy doing them. That's why investors crave noise. They want action, drama, confirmation, anything but quiet thinking. They confuse activity with progress. They're like hamsters sprinting on a wheel, thinking the spinning means distance. Real learning is the opposite. It's quiet, patient, and brutally honest. It doesn't flatter your ego. It exposes your ignorance. And people can't stand that feeling, so they turn away from it. They buy the illusion, instead the latest stock tip, the hottest trend, the fancy MBA jargon. They drown in information, yet starve for wisdom. That's the tragedy of modern investing. When I said that Warren became a learning machine, I didn't mean he just read a lot. I meant he processed what he read. He thought independently. He tested ideas against reality. He asked simple, ruthless questions. Does this make sense? What's the downside? What if I'm wrong? Most people never ask those. They don't want the discomfort of seeing how fragile their thinking is. They'd rather feel smart than be right. That's how you end up with a financial industry that's 80% noise and 20% value, and that's on a good day. You see, the world rewards the appearance of competence far more than competence itself. The television expert shouting confidently about interest rates gets paid 10 times more than the quiet man reading a book. But the quiet man gets rich. It's not complicated, it's just not fashionable. In a culture addicted to speed, the slow learner looks like a fool until compounding makes him a genius. Let me tell you something. Warren and I have sat through decades of board meetings. We've seen executives make decisions not out of rational analysis, but out of animal spirits. It's astonishing how often fear, envy, or ego runs the show, even among the so-called elite. They chase growth for growth's sake. They make acquisitions they don't understand. They buy back stock at peaks to look clever. It's all noise, dressed up as strategy. At Berkshire, we built the opposite culture, one that worships rationality. We reject ideas that feel good but make no sense. We prefer boredom over stupidity. And believe me, that's rarer than you think. The reason we've lasted this long isn't luck. It's because we designed a system that rewards patience and punishes impulse. That's what learning culture means in practice. It's not a slogan on the wall. It's a habit in the bloodstream. If you're an investor, you need the same thing. A daily routine that favors thinking over reacting. That means more books, fewer opinions. More reflection, less prediction. And above all, humility, because the moment you think you've got it all figured out, the market will hand you a lesson in gravity. Most investors don't lack access. They lack discipline. They could read the same annual reports we do, the same history, the same psychology, but they don't because it's not exciting. They want fireworks, not wisdom. The irony is that the real excitement comes from the results of boring discipline. Watching your capital compound quietly for decades while everyone else burns theirs chasing noise. That's the real thrill. But you can't fake it. You have to build a mind that earns it. And that mind is built by daily, deliberate effort, reading widely, thinking slowly, updating constantly. It's not glamorous, but it's unbeatable. Remember, in investing, everyone gets what they deserve. Not immediately, but eventually. If your process is shallow, your results will be too. If your process compounds, your wealth will follow. So when people ask me what the secret is, I tell them the same boring thing every time. Go to bed a little wiser than when you woke up. That's it. No algorithms, no insider magic, no motivational nonsense. Just daily intellectual discipline. It's so simple that almost no one does it. And that's why it works. The market punishes arrogance, but rewards quiet learners. Over time, the difference becomes astronomical. That's the 10x effect people dream about, not from speculation, but from mental compounding. So, if you're serious about improving your investing returns, stop trying to predict the next quarter. Start building the kind of mind that survives every quarter. Because money compounds only in the hands of a rational mind. And rationality is a daily habit, not a gift. Everyone talks about compounding money. Hardly anyone talks about compounding the mind. But the truth is, simple money only compounds after the mind does. If your thinking doesn't improve, your returns won't either. It's that straightforward. The problem is that mental compounding doesn't show up on a chart, so people ignore it. The market rewards patience, but the brain resists it. That's why most people never get rich, not because they lack opportunity, but because they can't wait for the invisible part of compounding to work. I've said this before. The first rule of compounding is to never interrupt it unnecessarily. Most people interrupt it every day with noise, ego, and emotion. They can't stand sitting still long enough for learning to take effect. When Warren and I started working together, we didn't know everything. We still don't. But what we did have was a mental habit of collecting good ideas and throwing out the bad ones slowly, steadily for decades. We weren't trying to get rich quickly. We were trying to get wise slowly. The money came as a byproduct of correct thinking compounded over time. Let me give you a simple truth. Every book you read, every mistake you study, every business you analyze adds a tiny bit to your lattice work of understanding. Most of it doesn't seem useful immediately, but over time it connects like threads weaving into a net strong enough to catch opportunities others can't even see. That's compounding of the mind. It's invisible until it's unstoppable. People think in straight lines. They expect results to come proportionally to effort. 1 unit of work, 1 unit of gain. That's not how it works. Real growth is nonlinear. At first, your progress feels painfully slow, like watching paint dry. You read and study, and nothing happens. But one day, something clicks. You make a decision that looks effortless, but it's actually built on years of silent preparation. That's how Warren bought American Express during the salad oil scandal. It wasn't luck. It was the result of years of watching human behavior, reading balance sheets, and studying incentives. When the world panicked, his brain had already rehearsed that situation 100 times. That's what mental compounding does. It gives you reflexes of rationality. You stop reacting emotionally and start acting logically. And that's when compounding begins to show in your portfolio. Most investors do the opposite. They try to compound money without compounding understanding. It's like trying to run before you learn to walk. They chase quick gains, make dumb decisions, lose money, and blame the market. The market isn't the problem. Their undeveloped minds are. Now, compounding in the mind requires the same conditions as compounding in finance. time, consistency, and the absence of stupidity. If you mess with the process by chasing every new fad or changing your philosophy every time CNBC yells breaking news, you break the compounding. Your thinking never matures. You're forever a beginner with 20 years of experience making the same mistakes. When we ran Berkshire, we didn't try to be brilliant every day. We just tried to not be stupid. That's the foundation of compounding, avoiding the big, dumb mistakes. People underestimate how powerful it is to simply not screw up. Most of success is survival. You avoid ruin long enough, you get rich by default. And that's true for learning too. You avoid mental ruin, dogma, arrogance, laziness, and your mind keeps compounding quietly in the background. Over time, you start to see patterns, not mystical ones, rational ones. You see how incentives drive behavior, how human nature repeats itself, how cycles rise and fall. You stop being surprised by events and start being prepared for them. That's the real payoff of daily learning. It doesn't just add knowledge, it changes how you see the world. When you look at a balance sheet, you no longer see numbers, you see a story about human behavior. When you watch a business fail, you don't call it bad luck. You recognize the poor incentives, the faulty assumptions, the predictable arrogance. That level of clarity takes years of slow compounding. You can't download it. You can't fake it. And you can't rush it. Warren and I spent decades reinvesting not only Berkshire's profits, but also our intellectual capital. Every dollar and every idea was allocated carefully. That's how we turned a dying textile mill worth $12 a share into a company worth hundreds of thousands. But the process started in the mind. We trained ourselves to think better, longer, and slower than everyone else. You could call it patience. I call it discipline. The irony is that the hardest part of compounding is not the math, it's the waiting. And waiting is emotional torture for most people. They'd rather do something stupid than do nothing rational. If you can sit quietly, keep learning, and let time do its work, you're already ahead of 95% of investors. If you can stay rational while others lose their heads, you're ahead of 99%. It's not about IQ, it's about temperament. The ability to delay action until knowledge has matured. That's the rarest skill in investing and the one that pays the highest interest. So here's the lesson. Your returns will never exceed your rate of learning. If you want compounding to show up in your portfolio, make sure it's happening in your head first. Learn daily, think deeply, act rarely, and let time, not emotion, do the heavy lifting. That's how mental compounding becomes financial compounding. And that's how ordinary intelligence, practiced consistently, turns into extraordinary wealth. You live in a world that's designed to keep you stupid. I don't mean that as an insult. It's just the truth. Every device in your hand, every screen in your pocket, every feed you scroll, it all exists to hijack your attention. You think you're learning, but mostly you're just consuming noise dressed up as information. The modern world rewards attention addiction, not understanding. It gives you the illusion of knowing everything while ensuring you remember nothing. And that's poison to compounding. When I was young, the world was slower. Information traveled by paper. If you wanted to learn, you had to dig for it. You had to think. There was friction. Now, information is frictionless, and so is stupidity. People gorge on headlines, tweets, podcasts, and stock tips until their minds are bloated with trivia and starved for wisdom. They mistake familiarity for knowledge. They mistake movement for progress. They mistake dopamine for insight. That's how modern investors destroy their edge. They never give their brains time to digest anything. You can't become a learning machine if your mind is a slot machine. Let me be blunt. You cannot outcompete someone who sits quietly and thinks while you're doom scrolling. You just can't. The internet is full of people who sound smart but think shallowly. They confuse reciting headlines with understanding causes. They know the what, never the why. The result? A whole generation of investors who can quote every market event but can't explain a single one. That's the opposite of compounding. It's intellectual decay knowledge that doesn't stick, wisdom that never forms. Warren and I built habits that insulated us from that. We read books, long, boring, unfashionable books. We read old annual reports. We reread things. We let ideas sink in slowly. That's how understanding compounds, through depth, not speed. You see, real learning is not entertainment. It's hard labor. It's wrestling with your own ignorance until clarity appears. Most people don't want that fight. They want stimulation. They want the emotional sugar rush of new. But here's the paradox. The more information you chase, the less wisdom you get. The brain isn't built to hold infinite input, it's built to make sense of input. And that requires silence, boredom, and repetition. 3 things modern people can't stand. If you want to rebuild your ability to learn, start by starving your brain of junk. Treat information like food. Most of what's served today is ultra-processed, garbage engineered for taste, not nutrition. Don't eat every idea that crosses your screen. Select deliberately. Read what lasts. Think about what you read. Write it down. I once said, I'm not smart. I just stay with problems longer. How? That's what deep thinking looks like, staying with an idea until it becomes part of your mental wiring. That takes time, and it's supposed to. If you're jumping from headline to headline, you're not learning, you're grazing. And grazing minds never build conviction. Conviction is what allows you to hold your investments when the market goes insane. It's what allows you to sit still while everyone else is losing their heads. You don't get conviction from noise, you get it from understanding. Understanding comes from time and thought. There's no shortcut. That's why the modern environment is so destructive. It trains your brain to avoid stillness. And stillness is where compounding begins. So how do you fix it? First, build walls around your attention. Decide what deserves it and block everything else. You don't need to know what's trending. You need to know what's true. Second, read more than you react. If your day has more clicks than pages, you're feeding the wrong muscle. Warren spends most of his life reading newspapers, reports, books, because he knows one truth. The big money is not in the buying and selling, but in the waiting and thinking. Third, write things down. Writing forces clarity. It exposes lazy thinking. Half the nonsense in this world would disappear if people had to write their ideas before speaking them. Fourth, avoid the crowd's emotions. Modern media is designed to make you anxious. It keeps you watching. But anxiety and intelligence don't mix. The calmer your mind, the sharper your judgment. Lastly, be brutally selective. You can't learn from everyone. Find thinkers who survived time, the kind who were right 50 years ago and are still right today. Then study why they were right. Compounding doesn't require genius. It requires focus, and focus requires subtraction. The fewer distractions you allow, the faster your mind compounds. When people ask how Warren and I managed to outperform so many smarter men, the answer is simple. We spent less time distracted. We protected our time like it was capital because it is capital. Most investors burn it on noise. We reinvested it in thought. And that difference became billions. If you remember nothing else, remember this. The world wants your attention. Compounding wants your patience. You can't serve both masters. Choose patience, choose silence, choose daily learning over daily distraction. Because in the long run, the investor who can think deeply for 1 hour a day will outperform the one who reacts 24 hours a day. That's not optimism. That's arithmetic. People think investing is about action. They imagine great investors as constantly buying, selling, predicting, outsmarting the market. That's Hollywood, not reality. In real life, the big money is made by doing nothing. Yes, you heard that right. The habit that separates the amateur from the master is the ability to sit still, to wait patiently until something truly worthwhile appears. And that's harder than it sounds, because inaction feels unbearable to most people. The market opens every day. Prices move every second. Your phone vibrates with opportunities. You feel like you're falling behind if you don't react. But that's exactly how the market robs you through your impatience. Warren and I built Berkshire Hathaway on a very simple idea. Don't just do something, stand there. We don't try to swing at every pitch. We wait for the fat one. We might stand at the plate for months, even years, doing nothing. People laugh, they call it lazy. Then one day we swing and the ball goes out of the park. That's compounding inaction. Years of nothing, followed by a moment of clarity. The problem is, most investors can't tolerate boredom. They'd rather lose money doing something than earn quietly doing nothing. They mistake motion for progress, as if frenzied activity can compensate for a lack of understanding. That's why markets are full of people playing the game instead of thinking the game. Let me tell you something important. You don't get paid for activity in investing. You get paid for being right. And being right rarely requires constant motion. Most of the time, the right move is to wait. Wait for the right business. Wait for the right price. Wait for your knowledge to catch up to your ambition. If you're always trading, always reacting, you'll never have the clarity to recognize a truly exceptional opportunity because your brain is too busy chasing average ones. You have to earn the right to be patient. That's what daily learning does. It gives you the confidence to sit still when everyone else is twitching. You can't sit still if you don't know what you're doing. That's why amateurs panic. They move because movement feels like control. But in investing, movement without understanding is chaos. I've said it before. A lot of success in life comes from knowing what you want to avoid: early death, bad marriages, stupid investments. Avoiding stupidity is the same as compounding intelligence. If you just avoid doing dumb things, your results automatically rise above average. And one of the dumbest things you can do in investing is overactivity. We live in a world that celebrates busyness. If you're not doing something, people think you're lazy. But the truth is, in investing, laziness is often just discipline in disguise. Warren once said, "The stock market is a device for transferring money from the impatient to the patient." And he's right. Patience is not passive, it's strategic inaction. It's the decision to wait for the world to serve you the right pitch instead of forcing a swing out of boredom. Think about nature. A tree doesn't grow faster because you stare at it. You can't rush compounding, not in biology, not in money, not in knowledge. You can only protect it. And protection often looks like inactivity. The same principle applies to investing. You don't improve your portfolio by fiddling with it. You improve it by removing stupidity and waiting for good ideas to ripen. The discipline to do nothing, that's the rarest skill on Wall Street, because it requires conviction. And conviction requires deep understanding, and deep understanding requires time. So the next time you feel the urge to act, ask yourself, am I moving because it's smart or because I can't sit still? That single question has saved us billions. Let me tell you what doing nothing actually looks like. It's reading, it's thinking, it's rechecking assumptions, it's studying industries quietly while everyone else chases headlines. Then, when opportunity finally knocks, you move with full force and full confidence. That's not laziness. That's preparation meeting patience. People call us lucky when that happens. But luck favors the investor who is ready to act after years of not acting. At Berkshire, we've gone years without major moves, and the returns kept compounding because our previous decisions were intelligent and we didn't ruin them by tinkering. If you find a great business run by honest people earning high returns on capital, why would you trade it away just to feel busy? That's like pulling up a tree every week to check if it's growing. The ability to do nothing is emotional discipline at its highest form. It's self-restraint in a world addicted to impulse. And like all disciplines, it's uncomfortable, which is why so few master it. The paradox is this: the investors who appear inactive are usually the ones doing the deepest work. The ones who appear hyperactive are often just compensating for shallow thought. Warren once joked that our favorite holding period is forever. He wasn't exaggerating. When you find something truly exceptional, the best course is often to stop looking. So here's the principle. Don't just learn when to act, learn when to wait. The world will always tempt you to do something. Your greatest advantage is the courage to do nothing until rationality demands it. Most fortunes are built slowly, one rational decision at a time, spaced far apart. The space in between those decisions is where compounding happens. And that space, that quiet patience, is the most valuable asset you'll ever own. People love talking about how to win. They fill shelves with books on success principles, wealth mindsets, and winning habits. It's all very cheerful and mostly useless. If you want to understand how to succeed, start by studying how people fail. Then just don't do those things. That's the essence of what I call inversion solving problems backward. Instead of asking, how can I be rich? Ask, what behaviors guarantee poverty? Instead of, how can I make better investments? Ask, what mistakes destroy portfolios? It's a simpler question, and it gives more reliable answers. The truth is, there are countless ways to fail and only a few ways to succeed. If you just eliminate the obvious stupidities, the rest tends to take care of itself. That principle has guided me my whole life in business, in investing, and even in personal decisions. It's not glamorous, but it works. Most people lose money not because they lack brilliance, but because they indulge stupidity, overconfidence, envy, greed, haste. They chase the hot stock, copy the neighbor, trade the rumor, ignore the math. And then they wonder why their results look like everyone else's. The secret isn't to be smart, it's to be consistently not dumb. Warren and I built Berkshire on that principle. Our partnership wasn't about genius, it was about discipline. We tried to avoid the things that reliably destroy other investors: leverage, ego, and emotion. We never borrowed heavily. We never bought businesses we didn't understand. We never tried to impress anyone. And most of all, we never believed we were smarter than the market. Just a little more rational, a little more patient, and a lot less stupid. That small difference practiced relentlessly becomes enormous over time. That's compounding again, but this time applied to wisdom. When you look at how people lose fortunes, the pattern repeats. Too much depth, too much pride, too little humility. They overestimate what they know and underestimate how unpredictable the world is. The cure is simple but unpopular. Admit ignorance and stay within your circle of competence. That's another way of saying avoid stupidity. You don't need to know everything. You just need to know what you don't know and stay out of it. I've said it for decades. It's remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid instead of trying to be very intelligent. But that's not a message people like hearing. They want brilliance, not caution. They want fireworks, not discipline. And that's why the crowd always loses. There's an old saying, when you find yourself in a hole, stop digging. Most investors never stop. They dig faster, hoping the next shovel of dirt will turn into gold. The moment you lose money, your ego kicks in. You want to fix it to prove you were right. That's how small mistakes become fatal ones. At Berkshire, when we make a mistake, and we've made plenty, we admit it quickly and move on. We don't defend stupidity. We dissect it. We ask, what did we miss? What assumption was wrong? How can we avoid this again? That's learning through inversion, turning every failure into a blueprint for what not to do next time. And over a long enough timeline, avoiding repeat mistakes compounds, just like money does. Most investors have it backward. They try to be brilliant once in a while and end up being foolish all the time. I'd rather be slightly above average forever than a genius occasionally. If you just remove the big blunders, the ones that wipe out years of progress, the rest takes care of itself. Avoid stupidity, and mediocrity becomes excellence by default. The reason this works is simple. Success requires correctness once in a while. Failure only requires stupidity once. One big mistake, the wrong partner, the wrong leverage, the wrong ego trip can undo decades of careful work. That's why Warren and I buy the principle of staying out of trouble. We'd rather be mildly right than spectacularly wrong. People often ask how we've managed to stay rational for so long. The answer isn't that we're superhuman. It's that we build habits to protect us from our own human weaknesses. We avoid situations where emotion tempts reason. We stay away from complexity we can't understand. We decline opportunities that look too good. And we never risk what we have for what we don't need. That's not brilliance, that's sobriety. In a world drunk on speculation, sobriety looks like genius.